mid-morning update with the Italy debt crisis that could be very systemic risk, as everyone is believing. And it's certainly in the tape. The Dow was down 253. NASI right here is down 69 handle. NASI 100 down 58. S&P 500, it's at 1246, down 29.7 handles, and minus 2.33% and all. Look at that VIX, the fear indicator. It's 3162, but look at that. That's up 7.77% right now. VXN. Look at that. 8.93%. Now this is in our system, and it's a weighted area that weights the fear. This is the NASDAQ 100. So VXN equals NASI 100 right here. It's all live in the video, MMTs. Now, with the Italian debt austerity, is that we did make a higher high from the left elbow gap down. Once again, our mid-morning update, and the mid-morning update would also include the option of the 600 call that we're buying. We got to $7 and we bounced $2 here. So we do know that that intraday strength on the call side is there. Once they shake the premium, they took 100% out with the Italian debt financial crisis markdown. They went from 14 down to 7, and that was where the buying opportunities at SMF Street are always kicking at the wholesale entry, selling back to the public, watching how that low got put in, watching that Google did come back in the mid-morning process at 1 hour and a half into the tape, but we can clearly see that when I raised the hood on the market maker platform, we can clearly see that the breakout started in this bar 11/9/2011, and the time was 10:39. 10:39 to the high of this bar at 1100. That was a 21-minute penny breakout right there that also gave you a very low entry. Yes, they closed at $14. Yes, they did mark them down. Now, having said that, marking down the 980 605 call to 430, and it too has a yield, and we understand that the markdown, because of the trend on Google, is very strong. And MMTs are taught that marking down the options with worldwide events, yes, such as Greece, Italy, Spain, Portugal, everything that stockmarketfunding.com has talked about for the last number of years. However, there are trades based on good quality U.S. companies such as Google marking that option down to that wholesale entry, and then you're $2 up almost. Those are the nice trades down here. And you can see how the markdown worked on day one of Italy. Okay? And the other thing that even here on that $600 call for 1119, it made a low of 1170 early in the morning. It never broke it. But then it has a high of 1410. They were marked down from 1760. So when Google acts well in the SMF platform, and it's a mid-morning update between the buyer and the seller, and you're taking out the high. But one thing that's lagging, yes, I am taking out the high, but I prefer that the bar be something like this, that this 3-minute bar would be a bigger green bar like this when you're taking out major resistance like we are right now live, right here in that bid and ask, and we're burning, and we're at 50 now, and we were almost minus 1 delta in our system. That was the markdown. We've come 100% off of there, 1036, and our platform 519 right now. That's $5 move off at this bottom right here at 67 cents a teeny. The thing that you like to see though is that you need the bigger teeny breakout bar You need that continuation to stay here at 100. You need this ratio dropping down to lows. It is going to break below. That was the very low of the day, 0.46. It had clocked it in at one point. You're there now. If you drop below it, you go much lower. And that number, you go much higher in this breakout. The breakout with the Italian debt austerity is that off of the bottoms it remains a bull trend with a markdown gap, then making that calendar daily intraday low consolidation right here. MMTs, look at this slowly. Let's take a look at the low here. That was it. And then, bam, you started rising. And you went all the way up here. That was that breakout during this time element. What is the time? Hey, it's 8:07 a.m. Pacific Standard Time on 11/9 of 2011. But nonetheless, this is what a rectangular two teeny consolidation does in strong names. Then they break higher in the system. The diamonds tell you that we were ascending in value and that the diamonds remain strong. And even the low and the body is going up. One full teeny again during this live moment with this consolidation two teeny breakout. And like I said, when you take out resistance here, you want to take it out with a buy action bar and a continuation. And you've gotten 3, 6, 9, 12, 15 on this continuation. This was the major area. These were that tops. Then you had your ascending diamonds in price action. And you've got teeny breakouts. That's in the SMF platform. During this breakout from that consolidation, everything is working for me. I'm at 0.41. I'm hitting lower lows. We were 0.96. Look at that. Minus 4.59. That was the intraday markdown. 10.36. 10.36 was the markdown with the Italian debt and how to buy robust names intraday. And like I said earlier in the video, and I told Tina that you could break back up here to 609. That's $8 up, because once you get that low, you want to see these highs going higher back toward that close. So you can see the ratio right here, 607.94 on our mid-morning update at 8:09 a.m. on 11/9, and it was all about how do I get an entry, how do I understand rectangular consolidations and ascending breakouts to teeny reversals within the time structure of the Italian debt. Once again, the calls went up in value off of $7. Once again, markets are made. Once again, 430. People were just selling out at the high up here. Let's take a look. You had some people selling at $7 prints at this time. 680s on the highs down here. Oh, a 580 got in over here. You can see the call is dropping in value because the name is reversing off of the high. So you can see where the 620 put is holding that low. It was 1490. The last print was 1490. This is the wholesale side of this market on an intraday level. Yeah, they close at 950. They can go lower. But Google, watch how that 605 call has just come off of selling these highs. They pull back $1. See, $7 out. No, knowing how to limit out and limit in. Knowing how to limit out and limit in. That's that call. On the other hand, the 600 for 1119 expiration, that's 1111 one we just did. This one down here, naturally, well, it's 1111 naturally. And this 600 is 11 and 11. That made the $2 bounce from the wholesale entry naturally. MMTs. 1170 never did break. But the thing about it is, when we get back to your chart, MMTs, is everything meeting that qualifier. You can see what that pullback looks like. This is a special mid-morning update on how to get entries at wholesale bids on calls that are marked down with international austerity in play or systemic financial worldwide risk is in play with markets. But markets are here. Hey, buying down here where Tina was at 720 and having that nice entry, and then it's up $2 to 940 by 980. Just understanding that this trend is strong on Google and that the headline events and the fear is in the tape. But once again, what did Mario say? If the hedge fund managers and mutual fund managers and institutional managers in the big investment communities, if you want to get in, now's the time. You have your chance. Even with the Italian debt crisis. Yes, it is true that that's very bad. But what are the fundamentals looking forward? How am I going to get from 601.98 up to that 635 handle? How am I going to blow through that 625 top that it got on it, which, and why is that mathematical equation got a lot of room to the upside to try to break this intraday high on this very intraday diamond live consolidation? And if you've ever watched the video for the first time, just let me tell you, it's here. It is getting the entries. It's taking advantage of Wall Street. They're always taking advantage of people. When you buy this at 720, you're really taking advantage of that markdown from $14, and you're watching this stock challenge intraday highs. How do I take advantage of all of the stuff that goes on behind the closed doors that people don't know about? The value of being here is you get walked through it daily, live, always attended to. You can see that leverage up $3. You can see this topping pattern right here on this. You can see that breakout right here. You can see that high. You can see what a double teeny ascending. The longer that it is, the stronger it builds. And then it's verified in here as always. How do you verify it? From where it went down and made that low, that top, which was in this green bar right here, it ascends, it sets up in the diamond structure, the SMF diamond MMT structure, and the strength is there, and that's what the diamonds do, is they guide you through the weakness and the strength. Between who? The buyer and sellers. Don't take the tape personal. It's between the public that MMTs are going through these nice trades and how to buy these wholesale and how to mark them down. Italian debt, ooh, marked it up $2 right here, okay, on that wholesale entries that we have out there. 1119, $600 call. It's starting to firm back up a little bit, but remember that the highs must be taken out. And not only that, when they are taken out, it would mean that that buyer just had to have it. And you can tell by the bid and ask what goes on in here. So you want to see where the bids rise in value and that they buy this side of the print. But he printed 27. You can see it. And he printed 27. Now, the bid must rise in value, and that would rise in value, but you buy that side of the market just like he did. 30 pennies right here. And then we know what we're doing, and this is called how you want to break that through that resistance live. The bid is rising, but now watch. 77s are printing. See, but the bid has to rise, and then they have to keep printing. See, he printed that 59. And that's between the buyer and the seller. There's an art to it. But the double diamond platform does it for you. You don't have to try to figure it out. It just tells you what it means. He printed 46. 85 down to 46, 66, 43s. So that's how they print the bid down. That's why you don't go through resistance. Special preview on the call side. Once again, 600, 1111, 605, call 1111. Wholesale down at the bottom, marked down here, 1760 to 1170, marked down 14. This one was marked down the most because it was deeper in the money. Call. See, it got right down close to it. $600 call strike price, 601.98, $600 call, expires this Friday. $14 close. They're still upside down. And Google just about to make an intraday high. Let's take a look at that breakout here in action at that intraday mid-morning high at 8:16 a.m. Pacific Standard Time. Yes, and it's very nice to understand how a very strong breakout will occur through these tops and how those diamonds make higher highs. And when you go through here, you have to have the SMF qualifier. What is that? One teeny, two teeny breakout. From this line, you have to go two teenies up. And that means we just made another high, and we're printing another high, and we're printing up this side of the market. That's how markets are made. We have got right now, I'm going to conclude how you can identify using that breakout right here off of that consolidation, what they have to do to continue that robust move. Not only that, you've got a 369 triple diamond. You had a quad triple diamond alert with that triple diamond support with an ascending diamond right now above those tops with the triple diamond at the price action teeny line. Look at that. It's making higher highs. Whoa, $4 away from that previous day's close. This is what happens down. Markdown bids will happen. They will be learned. Every MMT will learn from this video. And the entries that you had out there. And the trades that Tina had so wonderfully identified. And then the breakout at the resistances. And why that reading this correctly will put you on that side of the trade. And it does. And the thing about it is, MMTs, outside of all the austerity and all of the financial crisis, it's all true. Don't get me wrong. However, it's all about how people start paying attention to the U.S. equity market and the names that perform well. Here is your ratio low. That was minus 9.6, 0.96, then just hit 6.3, and you're at 0.39. You break below that, you will go higher. Intraday high, intraday morning breakout trade live, and it's all live in the transaction model here and now. No one can deny that part of it, and this is the movement. It's before the fact, not after the fact. And what was before the fact? Well, before the fact is understanding very clearly, once again, about what this was going to do and how this consolidation would play out in your favor with that nice ascending breakout. Once again, great trades off that bottom. That was that Italian debt markdown on Google, and that was that Italian consolidation with that big breakout.